Well, Hannover Re has
Thrilling
hiked
hobby.
its earnings guidance for the year, expecting 2.6 billion euros after a strong first 9 months. That's a jump of 200 million euros on previous estimates. But the reinsurer cut its ROI, return on investment target, from at least 3.2% to 2.9% amid losses in fixed income. We'll go into that bit as well a little bit later on. But I'm delighted to welcome back to Squawk Clemens Jungsthöfel, who is the CEO of Hannover Re. Clemens, always good to see you, sir. Thank you very much indeed for being so patient and joining us today as well. Look, you've written in your copy here today, in a landscape still clouded by uncertainties, demand for reliable and high-quality reinsurance protection remains strong. Tell us a little bit more about those clouds and those uncertainties, if you would, and nice to see you.
Thank you, Steve. Good morning, and thanks for having me again on the show. So yes, as you said, I mean, when we speak to our clients, when we talk to our business partners, we always hear that they face a wide range of challenges today, whether it is from climate-related changes, climate change-related losses, etc., from weather events, from the rising claims cost, or generally from geopolitical tensions. So if we just look at loss trends over the last 5 to 10 years, the trend is very clear. There's only one way for large losses, and that is up. And I think the 2025 events like the California wildfire or just Hurricane Melissa are strong reminders that there is volatility and that there can be big events. So the demand for reinsurance, for high-quality reinsurance, remains high for our clients, for our cedents, and therefore that long-term thinking, the long-term partnership is very crucial. And that also forms the basis for growth, for shoulder-to-shoulder growth with our clients in the future.
So many fascinating things. Let me just follow you up on developed world catastrophe, because those horrendous floods that we saw in Germany, southern Germany in 2024, the horrendous wildfires we saw in California as well. These are events now on a global basis that are hitting the developed, rich world as well. We've talked a lot about coverability over the years, about emerging as well, but cover in the developed and rich world, Clemens, are those losses going to be covered by a significant increase in premiums to justify insurance?
Yes, I think, Steve, when we talk about these heavy events, these devastating events, again, the severity and the frequency of big and also mid-size events, as we call them in the reinsurance space, have increased. And therefore, if we talk about these events, it's not only about coverage, about reinsurance, insurance coverage, it's also about building resilience and about prevention. I think that's something that has to be said, that this cannot be solved by way of insurance or reinsurance only. So we need to think how we can build a more resilient environment to protect ourselves, to protect societies. And then, of course, we need to model these events and make sure that the prices remain adequate. And I think there has been a reset in recent years, particularly in the renewal 1/1/2023, where sort of coverage and also prices changed. And that was basically a reaction to those long-term trends.
Clemens, in terms of of loss expenditures, you did record large loss expenditures, 1.18 billion euros, but that was within the budgeted range of 1.64 billion euros for the period. Obviously, a huge part of that to do with the U.S. wildfires that you've already mentioned. When we think about losses over the medium term, is this the kind of appropriate budget we should think about as the run rate from here?
Yes, when you look at our budget over the last years, that budget has increased over time. On the one hand, because our exposure, the growth, is a reflection of our growth, of the growth of our P&C reinsurance book in general, but it's also a reflection of the trend that I alluded to earlier, Juliana, really that increasing trend of large losses, be it from NatCat events, from large NatCat events, as you alluded to, California wildfire, but also, as Steve alluded to, sort of, mid-sized losses, floodings, hails, severe convective storms that we've seen in the US, those events are really increasing. So it's fair to say over the long term, we have been increasing our budget, and large losses have remained well within the budget. But for the next year, for 2026, given the growth of our portfolio, we have increased the budget even further. And as you said, it can be that we not stay within the budget in a given quarter, given the volatility, but overall we remain still in the budget, and there's still budget left for the fourth quarter.
Clemens, I appreciate the clarity there and also what we can look forward to next year. In terms of return on investment here, you recorded return on investment of 2.8% due to active realization of losses. Give us a little bit of color in terms of the losses that you've seen in fixed income and the other factors, the main factors that impacted ROE over this period.
Yes, happy to do so. And thank you for giving the opportunity to clarify that ROI. So I think it's fair to say that we've achieved a pleasing result for the first 9 months of this year. We had very strong contributions from our P&C reinsurance business, from the life and health reinsurance business, and also from the investments. And despite that, we've built even more resilience into our balance sheet. We've strengthened the balance sheet further. So we have increased our resilience, the resilience in our loss reserves for the P&C Re business. But the underlying result was so strong that it allowed us to realize some unrealized losses in the investment portfolio. And that has the advantage and the positive side that we lock in higher running rates in our fixed income portfolio, and that will support future earnings growth even further. So it was mainly a result of a strong underlying result in the current period, and giving us the opportunity to increase the potential for further earnings growth in the future.
Clemens, we love chatting to you. Thank you so much indeed for your time today. It's been really good to catch up again and talk about some of those big issues. Thank you for joining Juliana and myself. Clemens Jungsthöfel, who is the CEO of Hannover Re.